Okay, today I continue on employee benefit. Okay, for my first part video, I explained to you all the terms what will affect to your present value, liabilities, obligation, fair value, asset. So my second video, I'm focusing on the tutorial. Okay, class, you can focus on revision kit BBP. This question I get from a revision kit BBP version September 2018 until June 2019. Okay, so on the topic of employee benefits. Okay, so today you can see now the question required you. All right, first ask you to do what? SOFP, SOPL, OCI for 31st January 2008. Okay, class, remember for SOFP, SOPL, we only need the final figure because the calculations on plan asset and plan obligation, the calculation on plan asset and plan obligation will put under note on financial statement. So now we start to calculate. I will start with plan obligation. Under this plan obligation class, so we will start with opening balance at the period. The opening balance will be, as you can see in your questions, opening plan asset is 3.6, plan liabilities will be 4.3 on the 1st 2007. So this is your opening balance, so 4,300. Next, company contributions, as I mentioned just now, class. Contribution is focusing on what? When you say contribution, this will only affect to your plan asset. So we now are doing a plan obligation, so will not impact that. Okay, all right. Next, class, as you can see, paid to a former employees amounted 330. This will affect to your plan asset, also will affect to your plan obligation. Okay, now we are focusing on plan obligation. That means so class, remember to put this, sorry to inform you, because it's 4.3 million, so 000. Okay, next, when it comes to benefit paid, how much you have to pay? 330. Just remember, you must know when you paid. Paid on start of the year means that you will impact what? It will impact your interest as well. Why? That means you have to put the benefit paid amounted 330. Okay, because you have your 00 here, 330, then your interest rate will be 8% on the 31st January. 5 stars redundant, extra 58,000. Perfect, class. That we call as what? Okay, now as you can see, the start of the year. Okay, because paid of the start of the year. Next is what, class? Interest, as I mentioned just now, will affect your interest. So when you calculate your interest, class, remember the interest will be 8% times with 4,300 minus 330. Why you minus 330, class? Because this happened start of the year. When it happens start of the year, you need to find the net opening balance. Okay, so once that is said on the 1st January, this is a new principle, as I mentioned just now. It's a new principle, fast up or redundant. That means you have to pay extra 58,000 added to the value. Remember my first video I mentioned? Correct. If any redundant layoff, that we call as what? Curtailment. So you have your curtailment. How much is your curtailment, class? Because you have to pay extra. So when you pay extra, it's considered as an obligation as well, class. So that we put it as an 58,000. Okay. Just to share to you about curtailment. If you say an extra 50,000 added to the value of their pensions, means that obligation will increase, because you have to add another extra 58,000, so we put under obligation. Okay, class. Just to back to what I said in your video, my first video, part 1. If you have to put extra, it shows that the present obligation, okay, it shows that what you pay, okay, alright, that means your planned asset or plus cash reduced more higher compared to the present obligation, and the difference is equal to 58k. Okay, so under this 58k, that equal as what? You have to pay extra. This is considered, you have to pay extra. Correct, that is considered loss. Don't forget, later I will explain, must transfer to P&L. Same goes to this. This must be transferred to P&L as well. Okay, now curtailment is 58. Now we continue our story. Now we have what? Current service cost. Perfect, class. This is under planned obligation as well. 275. Actuaries mentioned current service cost 275. So, what? As you can see here now, class, what will be the ending balance on the 31st January? The ending balance for the planned liabilities first. We are doing our obligation now. 0.464 million. Alright. So this is your ending balance for your SOFP for liabilities first, because this is made by actuary valuation. So class, try you to add up. Yeah. What is the remeasurement that you realize here now? Okay. Okay, now we try to calculate. Okay, 4300, then you will minus 330 because you have a benefit paid, then you plus with your 3.8 plus with 58 plus with 275, your curtailment, your current service cost. Then you get 4621. Do you see the difference there, class? Yes, it's a very big difference here. So what will be your measurement, class? So as you can see now, the difference will be 19. So do you see, is it an increase or decrease? Increase in your planned liabilities. So that we call as loss on remeasurement, balancing figure. If you have strongly calculated, class, just to share to you, okay, if you have wrongly calculated this, there are possible that your remeasurement also will be wrong. However, don't worry. If the figure here wrong due to your calculation here, they will not have a nominal effect in marking. So in the essay later, you just write this loss or remeasurement from this balancing figure will be entered to where class? This is OCI. Why loss? As I mentioned to you, increase your planned liabilities. So that is considered planned obligation class. So at the end, you can see loss on remeasurement for obligation will be 19. Your ending balance will be 4640. Now we'll do for planned asset class. Now we do for planned asset. Under planned asset, it's the same step. Opening balance. You see, opening planned asset. Alright. Will be 3600. Okay, next liability, we have done it. Now we go to contributions. Remember I said will affect to your planned asset class amounted 550. The issue here, you must know when he contribute. If plan pay at the start of the year, you must settle it at the beginning of the year as well. Contribution will increase your planned asset amounted 550. Okay, why you need to know when class? Will affect your interest as well. Interest income. Okay, next we go to paid to employee class. As I mentioned, this affect to plan liabilities. Okay, this will affect what? Plan liabilities and your plan asset as well. So we know you're doing plan asset. You also must know when he paid. Paid start of the year. So when you pay a benefit plan class, I mentioned to you benefit paid at the start of the year as well. So you have to pay 330. Why it's very important need to know when they paid, because this will impact to your interest class. Interest income 5% times with 3600 plus 550 minus 330. Why you have to do all this class? Perfect, good, because all this happened at the start of the year. Then you can find your interest income amounted to 306. Interest on planned asset is 306. So this you have settled because an extra. So increase your present liabilities only. Current service cost is under present liabilities, no effect to your planned asset. You are doing planned asset now. Now your ending balance will be 4215. Who will do this ending balance class? Actual 4215 million. Now we try to calculate class. What is the total? Okay. What is the total for this one? Come, we calculate together. 3600 plus 550 minus 330 plus 306. You will get 4126. So class, increase or decrease? as you can see now. Great. You see an increase in your planned asset. Right? So that we call as what class? This we call as gain on remeasurement, your balancing figure. And any figure, you must put in an essay form. So you will get what is a gain class on your remeasurement balancing figure. You will get 89. Okay, so class this gain will enter to ACI item not reclassified to P&L. So you know your gain, you will know your ending balance as well. Okay, class, which part that enter to P&L? This one. Come, we do it together. What will we enter in P&L now? We see from the obligation first. From the first part, planned obligation. Alright, interest 3.18. Curtailment, because it's why? Because in the loss, you see, loss 58. Okay, current service cost 275. Okay, 318, 58, and 275 class. Come, current service cost will be 275. Loss on curtailment cost will be 58. And next we'll know your net interest. Come, we calculate class. You can see interest cost will be 318 and interest income will be 306. Consider net interest cost here. Okay, your interest cost will be 318 and for the interest income is 306. Is it right? Can we check? Let's check. 306, right. So we will get what class here? 12. So this is the only have you can see here that will enter to P&L. Actually, you got another one. It's past service cost, but not in the case study, not in the question. So you can also put under past service cost, but no past service cost here. So your total that you can put as a defined benefit expense, defined benefit expenses that will be entered to P&L will be 345. How about OCI class? So what is your net of gain? Just now you got loss on remeasurement obligation. Your loss on remeasurement of obligation is, remember just now, 19. Because your liabilities increase, then you got what? Gain on remeasurement for planned asset. Sorry, you got what just now? 89, right? Just check. From the first video, 19 loss from the obligation. My second page, 89 gain for planned asset. So overall, you will get what class? Net gain on remeasurement amounted of what class? 70. Remember, this is under OCI, item not reclassified. So class, how about SOFP? For SOFP, now you got your SOPL, OCI, How about SOFP? We only do a presentation on net. As you can see here, class, we compare to the ending balance only. Plan asset and plan obligation. What is the ending balance? Come back to the first page. 4640 and 4215. Come. So what is that? Just now I've shown to you obligation 4640, your planned asset 4215. Obligation is higher, so your net will be liabilities. So how much is the difference, class? Net liabilities will be 425. Net liabilities, because the answer, how much the value, class? Perfect. 425 net liabilities, because obligation is higher than the planned asset, so we only put net liabilities defined benefit plan. Okay, that's all on the application, on the calculation. The important thing, how you explain it. You must remember, class. You must remember. One paragraph talk about one item, current service cost. Explain about it in the essay form and including the presentation. Where to recognize it. Same goes for curtailment. Same goes for net interest. If any past service cost, you also need to explain. Each paragraph also can represent one item and explain the figure as well, because we need the application, we need the explanation. We are not preparing only. Class, all these calculations consider in the disclosure notes, because at the end in SOPL only the figure will be appear 345. So the detail of the 345 we'll see in the notes on financial statement. Same goes for OCI as well. This is only notes. We only can see this in OCI. Same goes for this. This we can only see in SOFP, because all this under disclosure as well. So that's all for on employee benefit. Class, you can refer a revision kit, BVP question number 4. Question number 4. I repeat, class, if you want to check the question, BVP kit, revision kit, September 2018 to June 2019 revision kit, question 4. Buy revision kit book, so you can do a lot of tutorial on this topic. Thank you.